Today on Forbes, this African fintech is giving workers a better way to send money home. Benjamin Fernandez launched his fintech startup Nala in 2018 with the aim of speeding up money transfers within his native Tanzania. Over the next 2 years, the now 31-year-old former television host and Stanford MBA hit one daunting setback after another. First, Tanzania's largest telecommunications provider issued Nala a cease and desist letter, cutting off Fernandez's access to one of the primary pieces of infrastructure he had been using to transfer money. Then his co-founder quit just a week before demo day at Y Combinator, the startup accelerator Nala had gained entry to in 2019, after 5 previous unsuccessful attempts. Finally, in 2020, the COVID pandemic hit, reducing the already lackluster demand for Nala's domestic payment service. Fernandez, Nala's CEO, says, quote, "We had to shut it down. That was really tough. We had to do layoffs and clean up the team." Instead of walking away, over the next 2 years, Fernandez recast and rebuilt Nala into a cross-border remittance service that now enables African migrants working in the US and 20 European nations to send money back home to 11 African countries, including Kenya, Nigeria, Uganda, Tanzania, and Rwanda. In all, it now has more than 500,000 registered customers, though none live in Africa. Most of Nala's employees are based in Kenya and the UK, and Fernandez spends most of his time at the London office. While Nala isn't the only one in this business, or always the cheapest service, it's adding extras built with an understanding of its target market. In Kenya, for example, Nala directly integrates with dominant mobile money service M-Pesa, allowing those working abroad to pay their families' utility bills back home directly from their account. Fernandez says, quote, "What we noticed is that diasporans care about the control of money." This is a growth business. The United Nations projects that Africa's population will nearly double to 2.5 billion by 2050, making the continent the birthplace of nearly 1 in 4 working-age people on Earth. Roughly 1 million Africans leave each year seeking work. But Fernandez has even bigger plans. In July, despite a depressed fintech market, his 100-person startup raised $40 million at an estimated valuation of more than $200 million, according to a shareholder with direct knowledge of the transaction. Only 5 other African fintechs have raised $40 million or more in a Series A fundraising since 2015, according to PitchBook. San Francisco-based venture capital firm Accrue Capital led the round, and Texas-based VC firm Amplo and DST Global, which manages $5 billion in assets, also invested. The money raised isn't money needed to sustain current operations. In 2023, Nala's revenue exceeded $15 million, and this past February, it became profitable on a generally accepted accounting principles basis, Fernandez says. Nala's chief financial officer, Andrei Klevtsov, who was formerly head of accounting at Wise, says, quote, "We've achieved profitability on the net profit basis. On the EBITDA level, the result is the same. We are still a very young company and don't have any significant adjustments from non-operating activities." Instead, Fernandez aims to use the new cash to grow in 2 ways. First, Nala plans to expand its consumer remittance business to South Asian markets, including India, Pakistan, and the Philippines, followed by Latin America. Second, a share of the new capital will go into securing more licenses and funding the development of Rafiki, a cross-border payment infrastructure designed for global businesses. Rafiki means friend in Swahili, a language spoken predominantly in Tanzania and neighboring Kenya. As Fernandez tells it, the payments infrastructure in Africa is today only 1% of what it could and should ultimately be. Africa remains the most expensive continent to send money to due to regulatory issues, currency fluctuations, limited competition, and a lack of payment infrastructure specifically built for global businesses. For full coverage, check out Segun Alako Yenekan's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.